In today's video, we're going to be really looking at different ETFs that will be great to have or at least purchase, I think, this month of March. Now, the reason is because, of course, we really want to look at some ETFs that could hold up against what's currently happening in the world. The world's kind of going crazy, or at least one individual person in Europe. So let's get down, let's check this out. First is the Spider S&P Aerospace and Defense ETF XAR. This is currently up the day of recording this by 2.5%. The reason is, of course, what's happening over in Europe and Russia, and the yield on this per year is about 0.7%, which isn't all that bad considering it's an aerospace and defense ETF. The average volume is around 86,000 shares per day. And this is one of the few aerospace stocks that continues to climb higher in generalities. Now, this is actually an ETF that hasn't gone up recently for what's happening in Europe, so this could show that this may have potential to go up very soon. However, this is a very interesting ETF when it comes to the holdings. Now, if we look year over year from December to December, we can see that there was a little bit of a dividend raise, and if we look at the year over year to the prior December, there was a dividend cut, so keep that in mind. This is why it's interesting, and that is the holdings. It doesn't necessarily hold any massive military stocks, but it holds very good technology stocks, and I'm against any kind of military action at all unless it's defensive. So of course things like Maxar Technologies, which is where we're getting kind of all of the GPS type of, I wouldn't say not GPS, but all of the satellite imagery, what's happening over in Europe, over in, of course, Ukraine, they are the massive company behind that, and I think that there's going to be more and more investment into that company, mainly because of their proven track record of very reliable information. Next is iShares Biotech IBB. This one has a very small yield. I wouldn't be investing in it for the dividend, but for the potential growth. And of course, a dividend is always very handy to have. Now, this one has an average volume of 2.8 million shares, and its MER is only 0.4%. It's had massive growth recently and some decreases. However, there is a very good reason why I'm picking this right now for what's happening in the world. While the dividend is not really stable whatsoever, it's really the holdings that get me. So of course, companies like Moderna, as well as many others in the holdings, will be of course with that virus shot, and you can take it however which way that you'd like, but companies like Regeneron are going to be needed if we continue to see war overseas, and if that's the case, a few of these companies will be getting probably some military contracts, or at least more than what they already have, and that could spur potentially some growth in their companies. Next is XEI, the iShares S&P TSX Composite High Dividend Index. This is going to give you a higher dividend, and there's a reason for that. When we're talking about Canadians, we're probably not going to be affected all that much with what's happening over in Europe, unless, of course, Putin decides to turn his head on us because we've got a lot of oil and a lot of ice. We own half of basically the Arctic, so when it comes down to it, they may come after us, but when it comes to war, you generally want to have something that pays you a dividend because you can't guarantee a job being there. You can't guarantee a lot of different things, but what you can guarantee is solid blue chip stocks will pay dividends, and that's what this holds. Now, while the chart does look pretty good, the dividends do tend to generally increase. Of course, this also does pay monthly, which is fantastic, but the companies on this holding could really do well. So for example, Enbridge, a pipeline company, yes, they do more green technology now these days, but they have a lot of pipelines. That's going to be needed if, of course, we start mining oil again to hurt the Russians. Now, why would I be really happy about owning a bank during this time? The Canadian banks have been through 2 world wars, and they have never decreased their dividend during massive recessions. During 2 world wars, they never decreased their dividend. They seem to be a nice safe haven for investment during very bad times, and they still continue to pay you. This is a very big thesis that I would really put a lot of money on, which I already have, because if you're dealing with a company that's well over 100 years old, that's never decreased a dividend through 2 world wars, you're looking at a pretty solid company. And considering that they're making more money now than they ever have in the past, really seems promising. Next is the Canadian High Dividend Covered Call ETF, ZWC. Now, this one pays a 7% dividend, and there's, of course, a reason why I'm saying that here. Again, this is a 7% dividend over the past year. They have recently lowered their dividend just slightly because there has been less volatility. Now that there's more volatility coming up, their dividend might go up again. But that's not what I'm saying investing in it for. But a covered call strategy will help protect you from the downside, in which case, when there's war, there's downside, in which case, these ETFs look pretty strong. And considering that there's been heavy volume going into pretty much every covered call ETF, kind of shows to me that there was some billionaires really knowing that there was something going on in the world and that something was coming up, whether it be a virus or a war. Somebody knew something. And this is what I'm talking about with the higher volume. Every ETF that is a covered call strategy has this massive spike. It also has a massive spike near the end over the past month or two, which then tells me that somebody with a lot of money has known that something is going to go on. It's a dividend that pays every single month, 10 cents or 11 cents. Recently, it's been 10 cents per month. Again, with higher volatility, that just may go up. And next is, of course, a safe haven that's digital purpose Bitcoin yield ETF. Now, of course, this has gone down, but so has Bitcoin during this time. So while it may be up the day of recording this video, it's down overall. Now, the thing with Bitcoin is I wouldn't say go out and buy a ton of it because we're going into a potential war and blah, blah, blah. What I'm talking about is the fact that when you're looking at Bitcoin, it's kind of a safe haven digitally. Now, keep in mind that it's still, if you're going to go into an actual real war, if you're living in Europe or whatever it may be, if you're looking at a real, actual, legit war, I would not be putting my money digitally. I would be putting it into physical assets, whether it be fuel, gasoline, diesel, whatever your vehicle takes or other people's vehicles take. I'd be putting money into that, as well as gold and silver. If you have lots of money, instead of carrying around $10,000 cash, you could carry around a couple of $3,000 or $5,000 gold coins, in which case that's a lot easier to carry around than a stack of cash this big. So from there, that is a good way to kind of conceal your net worth in a way if you're walking around, but also it's going to be the fact that if your nation comes under fire and your currency goes to zero, at that point you would still have that gold token that is still valuable of some kind. Also, gold tends to go up and silver tends to go up in war times because it's more valuable at that time. But with digital gold, in my opinion, which is Bitcoin, there's a few different options when it comes to these ETFs. And right now, if you wanted to have massive yield, you go to BTCYU, which is the US currency equivalent of the ETF. It's 17.75% dividend. But the one that I currently own myself is BTCY, which is hedged to the Canadian dollar, and it currently pays a 14% dividend. I would also like to say that Russia needs to also pull their damn troops out of Ukraine, and if they don't, then I hope the world really wreaks havoc on Russia and their military, and of course Putin. Anyways, I hope to see you guys again in my next video.